Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because Bitcoin is perfectly following our base case, and although I'm open to other cycle scenarios, it's amazing to see this 5-week rally we've experienced, especially after the doom and gloom that we had to power through over the past few months. So many were saying the cycle was over. So many were saying there's no way Bitcoin could hold the 50-week moving average with all of the tariff drama and uncertainty. And so many said we would not see 90K Bitcoin again this cycle. But we stuck to our system and remained patient and waited to see if our invalidation of closing below the 50-week moving average would get hit. But of course, it never did. And all of that tariff drama and uncertainty and all of those tariff experts that told us it had to be over ended up just like the Japanese yen carry trade experts in August of 2024, the grayscale unlock experts of January 2024, the SEC going after Coinbase, law experts of September of 2023, and the banking crisis experts of March 2023. And here we are with price trading almost $20,000 higher just a few weeks later after so many people panic sold the bottom. It's also great to see this recovery in sentiment we've seen over the past few weeks. It's crazy to think that just 5 weeks ago, the market was in extreme fear and many people were convinced we were in a bear market. And now that we're spending some time in the neutral region, it's clear that the market is trying to figure out if Bitcoin is just gonna roll over here soon, or if this is the start of the next all-time high rally breakout. We are also still seeing incredibly impressive inflows into the Bitcoin spot ETFs, and they were pretty resilient during all of the tariff drama. Although we saw quite a bit of outflows, it was nothing compared to the inflows that we saw prior, and it looks like the majority of ETF holders actually held through that correction, and that makes me incredibly optimistic for how this will affect price in the longer term, as a lot of these ETF buyers seem to be a lot more long-term oriented than short-term leverage traders. And it's crazy to think that over the past week, the US Bitcoin ETFs alone bought 6 times more Bitcoin than the Bitcoin miners produced last week. They bought about 18,000 Bitcoin, and the miners only produced 3,000 in new supply issuance. So we can really see that these Bitcoin miners are having a less and less of an impact on price. And what really drives this market today is ETF buyers and institutions, as well as long-term holders and whales that sometimes decide to take profits when the market is up a lot, and they decide to buy the dip when the market corrects. Bitcoin's chart also looks very solid. We know that Bitcoin loves trading ranges, and every time we've seen a range breakout this cycle, Bitcoin has not looked back. And just a few weeks ago, we talked about the range breakout we had when Bitcoin closed well above 88,000 and reclaimed back into its old range. So it's no surprise that we've seen continuation since then. And we now have Bitcoin facing its last major resistance level before it likely re-enters price discovery. Now, it wouldn't surprise me to see just a little bit of consolidation here to wreck some of the people that are FOMOing in and piling into leverage longs here. But this does look like a very solid uptrend, and it's hard not to be biased towards the upside when we have this much momentum and so many people are being forced to pile back in after panic selling the low. And if we take a look at the on-chain data, something that has really caught my attention this cycle is how slow and methodical this bull market has been so far. We see quick rallies and then investors end up sitting on a lot of profit. They take some profits as price consolidates. We rally again, hit these new unrealized profit levels. Investors start taking profits, rally again, investors take profits. And what we've seen at the past 2 local tops are the on-chain supply getting above 91%. Once investors sit on that much in unrealized gains, we see them start to lock in some profits. That makes Bitcoin consolidate, and then Bitcoin consolidates until enough profit is taken, enough supply switches hands, and it's been bottoming around the 75% mean. And we've seen that during these past 2 corrections. And that means this is a much more stable and much healthier uptrend compared to what we have seen in previous cycles like 2021, where Bitcoin just went incredibly vertical, could not sustain that price, and crashed roughly 50%. This time has been very different. The corrections have been 20 to 30% at most. We see a rally, consolidation, rally, consolidation, rally, consolidation, and it looks like we're entering the next rally, but it's not that aggressive blow off top, huge crash move that we've seen in previous cycles. This seems to be a lot more balanced and a lot more stable of an uptrend. We also have Bitcoin back in our expensive region for the first time in over 2 months. And remember, this is a moving target based on the 200-week moving average. And it doesn't mean I want to sell everything in this area to buy back lower. It just means I'm not really interested in adding to any positions at current prices. And if anything, I'd rather lock in some profits and manage my risk. This is exactly why Monday's free weekly report was called Managing Risk, and I talked about how I took some profits after weeks of just sitting back and enjoying the ride. I decided to lock in some profits because that's what my system called for, to get my cash position back to where my target is. And if you'd like to learn about my portfolio management system in a more structured way, you can check out the Crypto and Macro Enjoyers program in the video description. Early bird pricing is still available while I build out the remaining 2 courses, so you can check that out if you're interested. But for now, it felt quite good locking in profits at these prices after buying the dip significantly lower just a few weeks ago. And it does seem like it's becoming more and more unlikely with every single passing day that all of those investors that were waiting to go all in at 60K might not get their entry before Bitcoin sees new highs, especially with all the developments we're watching in the background. Just this week, the US Treasury Secretary Scott Bessent expressed his support for the crypto bills at a hearing. He's supporting both the stablecoin bill and the market structure bills. And again, this is just so different compared to what this industry has dealt with over the past few years. There's also a ton of optimism now that perhaps there's going to be some trade deals announced over the next few weeks. Of course, all of this good news starts to come out once prices have already recovered. So everybody's still waiting on the sidelines for all the drama to pass, usually ends up being forced to buy a lot higher. And usually the best time to buy assets is when everybody is scared and terrified and there is maximum uncertainty, like we experienced a few weeks ago. We're also still seeing great news coming out of various states all over the US. New Hampshire was the first to officially sign a crypto reserve bill into law. We've been talking about these developments for months, and even though we didn't actually need to see it passed, just the fact that the conversation was happening was pretty insane, again, compared to what we're used to. And now that we've seen one do it, I wouldn't be surprised if we see more with different variations. We also saw that the Arizona governor signed a law for the state to keep its unclaimed crypto. And again, this doesn't mean they're going out there and market buying Bitcoin like Michael Saylor is, but this is still a huge step in the right direction. And it does seem like Texas is going to follow quite soon. Their House committee passed the Bitcoin reserve bill for a full floor vote. So now we're going to have to see if it keeps advancing. And just the fact that these conversations are even happening and sentiment is shifting this way, both in the US and globally, is just something we couldn't have even imagined only 5 years ago. So I remain very optimistic that we have higher to go this cycle and that the top for Bitcoin is not yet in. We of course still have our invalidation at the 50-week moving average, and we will keep an eye out for concerning signs before then. But as of right now, I'm still incredibly optimistic as to what's in store over the next few months. And this optimism is even further solidified thanks to what we've seen over the past few months from global liquidity. It has worked for us this entire cycle, yet every single time people start saying this time is different because of tariff drama this, or Fed tightening that, or they get way too caught up in the 75-day lag, the 85-day lag. It actually has to be a 105-day lag. The truth is, although we're not able to use this indicator for very detailed and specific day trading, it's been incredibly valuable to figure out what Bitcoin's next trend is going to be. And right now we see it putting in its third breakout ever during Bitcoin's existence. The past two led to very parabolic Bitcoin rallies. And again, I don't expect this one to be as large because Bitcoin is a bigger asset now and diminishing returns is a thing, but it's hard for me not to be incredibly optimistic when we see the global liquidity index breaking out, and it seems like fiat currency globally is getting ready to be heavily debased by all of these major central banks. And this makes even more sense when we take a look at the US dollar index and what Bitcoin has done the past 2 times it broke below 100, and it seems to be getting ready to do that once again. The US dollar is the reserve currency of the globe, so a weak dollar gives central banks around the world some room so they can weaken and ease their currencies as well, and that should be rocket fuel for risk assets like Bitcoin. So we'll see what happens. It's been a straight line down for the dollar index over the past few months. A bounce here is something that makes sense. I have no idea how high that bounce is going to go, but it does look like gravity will take hold eventually. And after this 2-year consolidation with one last spike and very aggressive rollover, it looks like the US dollar index is heading down over the next few months. And now we didn't see any rate cuts from the Fed yesterday. They are keeping rates paused and they're continuing QT, but I think it's only a matter of time before they're forced to ease and cut rates, and the market is already pricing that in. Here, if we look at the rate cut expectations, we can see 1, 2, 3, 4, 5 rate cuts priced in over roughly the next 12 months. But to be honest, it wouldn't surprise me if we saw even more rate cuts than the market currently expects, because we have inflation headed in the right direction. If we look at the Fed's preferred measure of inflation, core PCE, we have the labor market slowly weakening, but it's not falling apart quite yet. If we look at the unemployment rate, the Fed's preferred measure of employment, and if we look at the Fed's preferred measure of growth, real GDP, it's forecasted in line at 2% for Q2, and that is the Fed's target for growth. So I don't see the reason for them to keep rates as high as they are now, and I do expect quite a few cuts this year, and that should be a very strong tailwind for risk assets like Bitcoin and the S&P 500. And speaking of risk assets, we're finally seeing some signs of life from Ethereum. We talked about how bullish this false breakdown below 1500 was. Now we headed straight back to our old range high and the psychological resistance of 2000, and it wouldn't surprise me if we went straight to 2500 once that level breaks. And it looks quite solid on our Ethereum Bitcoin pair as well. It ended up finding a nice rounded bottom at the exact same level that it did in the previous bear market. Solana also looks quite solid. False breakdown below a major range low. Everybody capitulates, everybody sells, everybody panics over the tariff situation. Perfect retest of the 200 week, and now it's headed right to our target of the range mid. If it's able to reclaim that level, range highs likely come quite quickly for Solana as well. It's also starting to put in a higher low on its Bitcoin pair above the low that it set back in April, which aligned nicely with our December 2023 lows, and that looks ready to head to the range low on this pair as well. And there's a lot to be optimistic about when it comes to both Ethereum and Solana, as well as other smart contract platforms. We know that tokenization is the hot conversation right now, bringing everything on chain, whether it's treasuries, whether it's stocks, whether it's gold, as well as all types of other assets that aren't that easy for many investors globally to access if they don't have access to easy ETFs like we do in certain countries. And we also know how big of a deal stablecoins continue to be. Stripe, one of the largest payment processors in the world, rolled out stablecoin accounts in over 100 countries. And this stablecoin growth chart that we've seen since the beginning of 2024 has been absolutely incredible. And with the regulatory framework we're going to have in the US soon, this growth in stablecoins looks like it's likely going to be even bigger than what we saw in 2021. And for those of you that don't appreciate the value of stablecoins, because maybe you live in a country where you have a relatively stable fiat currency, this is what volumes look like in places like Argentina, Brazil, Colombia, Mexico, Venezuela. You can see that stablecoin volume makes up more than half of the crypto transactions happening in those countries. And stablecoins alone do more volume for payments than altcoins, Ethereum, and Bitcoin combined. So we'll see what happens going forward, but Bitcoin really has been shining throughout all of this tariff drama and is significantly outperforming the S&P 500 and the Nasdaq over a 1-year rolling basis. Solana is trying to reclaim that title of outperforming them as well. Ethereum still has a very long way to go, but this asset class can move quite quickly, especially when coming out of a very aggressive and deep correction like the one Ethereum experienced. Now, of course, a lot of that price action is going to depend on Bitcoin. This is a very difficult call here because I wouldn't be surprised if many people are starting to open new short positions. So I don't know if Bitcoin is going to break out, then consolidate, or if we're going to consolidate here, retest the range low, and then break higher. But it does look like we're going to higher prices over the next few weeks for both Bitcoin and the S&P 500, as long as there's no huge surprises with macro or tariffs or the Fed doing something out of nowhere. But based on price action, it does look like perhaps there could be some consolidation, but we do have higher to go this year. And as we look forward towards the longer term, we still have the federal government running these huge deficits. That trend is only worsening, and it seems like Trump and Doge are throwing in the towel when it comes to cutting spending in any type of significant way in the short term. And that means more parabolic debt growth, which also results in currency debasement, and more money supply growth, which is a bullish backdrop for our risk assets like the S&P 500, and definitely bullish for our fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.